Welcome to the
CTRM,
Stock
Castor
Bar. I
Maritime.
just wanted
Wow,
to share
that's
one
been
of
a
my
tough
favorite
stock.
sources with you guys.
Sundial in the
Again,
marijuana
it's
space.
good video
Global
Friday.
uranium as another
Again, I just wanted to share with
alternative
you
to clean
what
energy.
he
XROF.
shared with me.
Again, this is a stock that long term, I invite everyone out there to go do your homework on XROF. It is a stock that I currently own, and I own for the long term based upon what they can do long term. Tonex Pharmaceutical. This was a stock that I liked because it was one of the few stocks that were out there looking at fibromyalgia. When COVID hit, they pivoted over to COVID, and then they went back to fibromyalgia again. This is a tough stock because they can't stay focused on what they really want to do, and it makes it tough for that stock. And Senseonics, this is a personal one for me, for people who have diabetes. They have an implantable device that is an easier way to check your blood sugar level. And I am a diabetic, and I hate poking my fingers. Any of you are out there in the same boat, you understand. And the implantable device, the news on this was very interesting on what they could do. So that was the reason why we looked at all of these stocks. All of these stocks were in the news, and all I did was report on them. Let's do a graph of these stocks real quick, put them on a 3-month graph, looking at CTRM. Someone asked me, what do you think is still about CTRM? There's a couple of things that I still like about the stock, even though it's lower on a 3-month basis. What do I like about the stock? Well, one, I have value at the top. The stock has always remained undervalued, and even safe undervalued stocks that are rising in price. The bad thing is that it's not rising in price. I've got a 20-day exponential moving average. Currently, it's just above it, but sitting at a level of resistance at $1.28. And down below, look at the earnings per share. The earnings per share is still a positive thing for me. But the bad thing about it is that it's just not rising. I can't time when it's going to just stop going down and start going up. I got a solid level of support at 104. It's trading at 131. All I'm saying is just be careful with this. It's still a lot of good signs. They keep buying boats and buying more boats and buying more boats to ship out stuff. So those are all positives, but if I need to hold it, I need to wait for it to get above at least that 3-month high. The next stock on the list, Sundial, as a marijuana stock, also undervalued, but watch the earnings per share. Earnings is just falling on the stock right now, so I'd be careful with it. And it's right about even to where it was about 3 months ago, a down day today. Just be careful with that. Going down to uranium, again, as an alternative to clean energy outside of electric, a lot of companies, a lot of countries are getting on board with building new reactors and new plants. So from that, uranium, when I talk about nuclear plants, uranium is going to play a big role in that, sitting in a big channel currently below the 20-day exponential moving average. XROF, as I mentioned, all I need for you to do is just go out and do your homework on it. And I think that long term, over the last 3 months, though, it is higher than it was over the last 3 months, pulling back a little bit. I think a lot of profit taking because a lot of people have been sitting in the stock a long time waiting for it to move. Next one is TNXP. Man, again, the news behind the implantable, they had a 30-day. It got approved to a 90-day implantable. They're working on a yearly or 365-day implantable, but not enough to move the stock's price higher. I love the news behind it, but the stock's price is not giving me any opportunity to really make money, even though it is undervalued and earnings per share is rising. And the last stock is Senseonic. This was the glucose one. Senseonics. TNXP is the fibromyalgia, flipped over to COVID, switched back to fibromyalgia. I think they need to settle in on what they want to do. But Senseonics with the glucose monitor, implantable, going down, it's been a tough stock and they're losing money. All right, so that was a follow-up on all of the stocks that made really big views on our channel and where they stand now. So now, let's go out to the news. I'm going to give you 5 stocks that I want you to keep your eyes on right now, and we're going to see why I like these stocks. Tanker, Nordic American Tankers, Third quarter 2022 dividend announcement, they raised the dividend. And I think that always makes it good or favorable for a company to bring more investors in if they can raise dividend. Here's another one. ARC continuing growth in earnings per share for third quarter. This came out earlier this month. ARC Document Solutions, a leading provider of digital printing and document-related services, today reported its results for the third quarter, and it was better. It was better than expected, as you can see all the way across the board. All right. So again, some of these stocks that I'm looking at are outside of the whole range of being recession. All right. So they can do their own thing outside of recession. Another tanker company, TK, earnings per share, 32 cents versus US 77 cents, loss in third quarter. So revenue was up 104%. Net income up $78, a loss in the third quarter for 2021. So why are you liking this stock? Because of the space. Profit margin, 11% up from a net loss in the third quarter of 2021, and earnings per share up 77 cents, loss in third quarter of 2021. So this company is on the rise, something to keep your eyes on, and the tanking space is on the move as well. Next one, OIMM, and I'm behind a paywall on this one, but as I scroll down, where do I want to see? Here it is. A 2-year net income to common stockholders growth rate now stands at 193%. Its 4-year net income common stockholders growth is now at 305%. The year-over-year cash and equivalents growth now stands at 10%. Over the past 37 months, OIM's revenue has gone up 38,382,000. That's a positive on the stock. And the last stock is TGLS, which is Technoglass. I'm looking at market beat, analyst rating, strong buy, 15.9% upside. Insider trading shares, selling shares. I'm thinking that as we get closer to the holidays, people may be selling some shares, or it's part of their compensation. Projected earnings growth rate sitting at about 10%. All right, so these are my next 5 stocks to keep our eyes on. And here they are. Now, I want to show you something, why I like these stocks. I'm going to go back in time to when we got a confirmed down in the market, which should have been 22. Here it is, August 26th. So we got a down call in the market. I want to show you what these stocks have done since the market has been in a down call. I'm going to do a quick test of all of them. That's why I like these stocks. These are outside the realm of a recession. ARC, only stock that went down, it only went down 2%, but all of the other stocks went up double digits, above 20%. Since we've been in a down call in the market, the market's down 2.89%, but these 5 stocks altogether is up almost 25%. Now, the question is going to come up is, well, do they still have more room to rise after all of that? Well, let's go take a look. Let's go take a graph, look at all 5 of these stocks, put them on a 3-month graph. From here, let's get a look of why I think these stocks still have the potential to soar even in the current market's condition. So I'm going to put this on a 3-month graph. There we are. Nordic Tankers. I like the move. Now, the stock was overvalued, currently undervalued, broke out of a channel above the 20-day exponential moving average, and loved the earnings per share. A new 3-month high on the stock. Next one. Wow, TGLS. Big bump in earnings per share, trading higher on big volume, breaking through a level of resistance, sitting at 25.89 and undervalued. Next stock, OIIM. Now, this stock is above the 20-day, sitting in a channel. It's a chip stock, and it's overvalued. And earnings is falling. So why am I looking at this stock? Because the chip space is on the rise right now. And if the industry is rising, most likely the stocks in the industry will rise. This is more of my speculative play in this list right now. But it is trading at a level of the 3-month high, sitting at $4.50. And it is overvalued. So I'd be a lot more careful with this stock than the other stocks. Another tanker, look at the rise stabilizing in the earnings per share above the 20-day, undervalued. I love the 20-day serving as a solid level of support on this stock. And man, ARC, a stock that's pulled back, found a level of support, broke through 2 levels of resistance, approaching a third, which is close to the 3-month high.